Hello, everyone. I'm Joseph Giarraputo, the founder and editorial director of Global Finance, speaking in New York. Joining me will be Naa Wilson, head of cross-border payments at Standard Bank Group, speaking to us from London. In the upcoming September issue of Global Finance, there'll be a series of articles about the rise of central bank digital currencies, or CBDCs as they are known, and their implications for corporate treasurers and their banking partners. Many corporate treasurers have avoided cryptocurrencies due to their perceived volatility and lack of regulatory clarity. But as central banks explore the prospects of launching digital currencies, Treasury departments must prepare for a new reality of digital money. I'm pleased to welcome Naa Wilson to discuss the topic. Naa, what does the entrance of central banks into digital currencies mean for banks and treasurers?
Thank you, Joseph, and thanks for having me. So if you look at the historically how CBDCs have been approached by central banks, it's been really with caution, a whole lot of caution. And it stems from just the uncertainty and lack of understanding of digital currencies holistically. And so central banks have taken their time to get into digital currencies. And it's actually very powerful because it changes the landscape holistically. For the first time, we're seeing 85% of central banks around the world conducting some sort of proof of concept around CBDCs. That says a lot. It says that it is being taken seriously, and it's something that central banks are actively pursuing to legitimize within the financial services sectors or within the landscapes that they regulate. And so it is a dawn of something that is unknown, but nevertheless, it holds a lot of opportunities, not just for banks or financial institutions or even any financial industry participant, but also for the clients that they serve, particularly corporates. If you think of the various advantages that it could lend to transacting for corporates, it's immense. And so it's exciting.
And how can we mitigate the risks inherent in CBDCs?
Joseph, if you think about the reason why central banks have been hesitant to get into digital currencies, there have been a number of reasons. Digital currencies as a whole have been quite topical because they bring in a lot of efficiencies. However, with these efficiencies and opening new opportunities holistically for transacting also comes with risks such as security, risks associated with fraud and the likes. And so the fact that if you look at central banks' intentions and what they would like to introduce in bringing in launching their own digital currencies, they are equally looking at addressing these risks. And the fact that they are in it is a starting point. It helps to legitimize the digital currencies being used. It starts to create a backbone within any industry or in any market for them to be transacted on. So the risks in itself do not go away overnight, but the fact that central banks are looking at digital currencies in itself addresses quite a large portion of it. I just also want to mention that if you look at the various benefits that digital currencies would bring, equally the risk around making sure that trading in digital currencies does not introduce systemic risk into a market, that equally is quite critical. If you look at the volume of transactions, the ability for digital currencies, the platforms on which they are traded to be able to handle these volumes, all these risks are quite topical, and hence central banks are looking at a lot of proof of concept as a starting point in order to be able to launch into the digital currency arena.
How will the growth of CBDCs benefit treasurers?
CBDCs will benefit treasurers quite significantly, just as it will benefit financial institutions as well. On the one hand, what treasuries seek overall are efficiencies, optimization, and moving away from being historically operational to being strategic. And a big part of being strategic is not spending a significant amount of time gathering insights, for example, having insights that you need to make decisions at your fingertips. And the platform that CBDCs or any digital currency really presents allows you to be able to it provides an infinite array of opportunities when it comes to data mining and translating that quite quickly into insights. So that's a big game changer for treasurers. Equally, if you look at the efficiencies and the cost element, particularly when you transact in digital currencies, that's significantly lower than physical currencies today. It's been proven. And so those cost reductions that financial institutions or banks will be able to benefit from can easily be passed on to corporates who they bank. And so that becomes quite powerful as well in terms of moving away, not just from operational, tactical decision making on a treasurer's side, to actually not having to think about some of the things that they've historically have had to worry about consistently, but knowing that they can transact efficiently, optimally, at a low cost, and yet being able to be forward thinking and being ahead of the curve in making decisions through the insights and data that this platform presents.
Finally, how does Standard Bank intend to take advantage of the opportunities afforded by CBDCs?
Central Bank has been exploring different opportunities around digital currencies holistically, and it's really at its infancy at this stage. However, we do recognize that it is inevitable at some point. Trading in digital currencies will become part and parcel of the fiber of any financial institution. But it's subject to regulation, it's subject to the journey of central banks in launching their digital currencies, and it's equally subject to the maturity of the platforms on which digital currencies will be traded. And so with that, we closely following the trends, exploring through various proof of concept initiatives around how we can, what the benefits that digital currencies bring to play, partnering with a number of central banks in the markets in which we are present, from an advocacy perspective, to understand the thinking and the journeys they are on around digital currencies. So we, as I said, we are really at its infancy, but we do see the benefits. We do see that it will become integral to any banking operation in the near future, and we continue to track that closely.
Naa, that was very interesting. Thank you for joining us, and have a good day.
Thank you, Joseph. Much appreciated.